Well, good morning and welcome to Business Mornings, 10 a.m. right here in Lagos, Nigeria. And we see the second trading week of April. Still, we see some drama coming in from March. We've moved from escalation to de-escalation, then escalation back again. And talking about escalation, let's look at oil prices now. They've climbed today after suffering their steepest one-day drop since April 2020 as disruptions in the Strait of Hormuz that persisted. Renewed geopolitical tensions in the Middle East clouded the outlook for supply. And yeah, we did see major drops yesterday. We've not seen oil drop a whole over 10–14% in just one trade. But we're back up again. Brent crude, $97.26 a barrel. 2.63% higher this morning. WTI, that's at $97.72 a barrel. Still more expensive than Brent. Yeah, we did, talk about the premium between WTI and Brent. Normally, Brent is more expensive than WTI, but that has changed for a while now, and it continues. But now, they're almost equal. Just 72 cents, a few cents higher. That's talking about WTI over Brent, 3.58% up. So definitely we're still seeing volatility in the oil market. And, supposedly there's supposed to be some kind of truce at this point. But since we're seeing, other attacks happening right there in the Middle East, that's almost taking the truce off the table. But we're still quite hopeful, analysts are hopeful that this might actually stand, this latest truce, and hopefully we see more de-escalation, because I guess you can't just switch the button on and off and everything just goes back to normal. All right, still oil related, we have the World Bank giving some warnings for the Nigerian economy, and the latest one, they're urging Nigeria to restore petrol competition, as the Dangote refinery is dominating supply. That's from the World Bank. They're calling for reinstating petrol import licenses to increase competition in the market. They say fuel prices in Nigeria are 12% above global benchmarks. And, definitely the World Bank's been giving projections for growth for Nigeria and for sub-Saharan Africa. But let's drill down on this latest one now. Joining me for this conversation, we have Dr. Ifeoma Nwokolo. She's an Assistant VP, Head of Research at Financial Derivatives Company. Great to have you on the show, ma. Good morning.
Good morning, Larry.
Yeah, so we see the World Bank pushing for Nigeria to restore petrol import competition. I guess that's something we've all, tried to move away from with the Dangote refinery and maybe getting other refineries working at this point. How significant is this recommendation for the downstream oil market? I would think the World Bank will be happy we're refining our own oil.
Well, I would say that this proposed importation by World Bank is coming at the wrong time, because I know that the petroleum industry is already gaining its foot, and we are going off import dependent and PMS for now. And I want to let us know that the petroleum industry is critical in nature, and we have seen some massive domestic investments. So Nigeria cannot refine locally and also import massively at the same time. So this is it's more or less like policy contradiction. So we should have protection over our industry. We should have industry protection. So when you give access to importation, you are encouraging dumping. Oh, you see dumping going on in that industry. And once that happens, there are implications. For us, where you have a balanced policy is where the local industry is not producing enough and you want to complement so you can import. But this time, we know that the local industry is producing enough for us to consume. So why are we encouraging importation. And we want investors to come into the refinery, to our petroleum industry. We want them to import. We want them to invest in the petroleum industry. If we want them to invest in the petroleum industry, asking for importation is like discouragement of investment in that particular sector. So I think if the issue is that if they feel there's price exploitation or policy pricing and monopoly pricing, I think that we have consumer price protection agencies. This is the time for them to do their work. But for encourage importation, it has several implications on the industry. If you look at modular refineries, some of our modular refineries can be referred to as sunset industries. So if you encourage importation, which we have already gone past, so you may be trying to kill those sunset modular refineries. And what happened to the infant industries like the Dangote refinery? What happens? You see that investment in that industry is definitely going to die. And very soon we are looking at listing of this industry in the GS. So are we encouraging people to invest or to divest industries? And let's not forget that once you encourage importation and you are importing, you are creating employment outside and creating unemployment. So we should look inward and know that the unemployment level alone and the squeeze we are facing is enough for us to increase unemployment within. And also it's going to also weaken the industry. Yes, and it will slow Nigerians' industrialization, reduce investment, discourage expansion of the modular refineries. So it means that our modular refineries will remain as sunset industries. So we need to look inward because it's also going to reduce the multiplier effect that we already have, having these local industries around us. It's going to also increase FX demand because for you to import, you need to source for FX. Further pressure on the Naira. Already we have seen our gross external reserve drop from 50 to 48 billion dollars. So it is going to be further pressure on the Naira. So I think that the goal should be healthy competition and not import dependency, because this can destroy the very domestic capacity needed for long-term competitiveness. So the essence is to protect our infant industry to do better and not to start encouraging importation. So how sure are you that even if we import, it will not end up in smuggling? Because if you look at the countries around Nigeria, I think we still have the cheapest PMS price and diesel price. And let's not forget that if we have domestic industry during the global shock that we saw oil price go as high as $120 per barrel, I tell you that PMS and diesel price would have hit the roof. We have seen PMS selling for over 2,000 naira per liter. But because we have domestic industry, we didn't really feel this like other countries. So I think this suggestion is not coming at the right time. I don't think it's the right decision right now.
Well, I guess it's a recommendation.
Yes, it's just a recommendation, but I don't think this recommendation is necessary.
All right. So looking at other countries now, we have the likes of, Mexico. They refine and they also import fuel. Brazil, Egypt. I think it's tagged a refining gap at this point. Do you think we have a refining gap? And with the Dangote refinery currently dominating supply, is it a monopoly or just a transition market?
Well, I would say it's a transition market. I wouldn't call it a monopoly because we have other modular refineries, which we have been agitating that if they are not functioning, there is need to sell them out for investors. But if we are encouraging importation, I doubt if investors are going to be investing in these modular refineries. If the question is that we are seeing monopoly pricing, that's why I talked about the consumer price index agencies. Other countries are importing. Yes, we're not saying we shouldn't have importation, but not aggressive importation. The way the World Bank is putting it is looking as if we should now depend on importation. No, there will still be importation. But I'm asking why the importation? Why? Because we have the refineries that are producing more than enough of what we consume. Importation is good. I'm not saying it's not good. It's good, but it shouldn't be an aggressive importation that will harm the domestic industries that we have. So there should still be protection for our local industries. I think that is the goal.
Okay, and let's pivot now. Back to the oil markets. At this point, we had the biggest drop since 2020. That was the biggest single-day drop. That was yesterday. But now we're beginning to see some recovery now, and it almost seems like the de-escalation that we saw yesterday is not what we're seeing today, with oil already rising. Brent 2.63% higher this morning. WTI 3.58%. WTI is still more expensive than Brent at this point by a couple of cents. Is it time to still, feel optimistic about de-escalation, with what we're seeing playing out in the oil market today?
Well, Ladi, I would say that what we saw yesterday, what we saw 2 days ago was an abrupt response by Trump. And you know that it's a fragile ceasefire. It's a ceasefire talk. It's not a ceasefire request. So we can refer to it as a truce. So the market is still rising in uncertainty. Coupled with what happened early hours of today or yesterday, we saw that Israel attacked Lebanon. So this is show that there is tendency that we may have escalation, even though Iran's tried to do what we call a human shield. Yes, before the deadline that Trump gave them, they all shielded their infrastructure. I think that was why we saw that abrupt response by Trump. But that does not mean that the issue has fizzled, because Iran has insisted not to open the Strait of Hormuz. And right now, to speak, the Strait of Hormuz has become a choke point. A choke point in the sense that they are even talking about collecting toll fees of $2 million per tanker that passes through that checkpoint. So if that happens, I think Iran will be sitting pretty. They will be making over $60 billion compared to what they make ordinarily from exportation of their crude oil annually, which is around $40 to $64 billion, depending on the price of oil. So I think that the market is still factoring in uncertainty. That is why you see the oil price went down sharply to $92 per barrel and reversed itself this morning to about $97 per barrel because the uncertainty is still very. And let's not forget, Trump is already saying that the militants are still very much around and within the Iran. So anything can happen. But are we going to see a massive attack this time? I don't really think we are going to see a massive attack this time because the truce can be extended after, because US is going to be having their midterm election very soon, probably maybe in June or July. And Israel too have their own saga they are dealing with. So I think this ceasefire talk between the US, and, Iran and Israel may be extended. But the market, the fear that there is going to be escalation is still very high. That's why we are seeing oil price hovering around 90 and $97 per barrel.
All right, I guess we have to keep tracking, what's playing out there. Hopefully we get convincing de-escalation at this point. Thank you so much, Dr. Ifeoma Nwokolo, Assistant Vice President, Head of Research, Financial Derivatives Company. Thank you for coming on today.
Thank you for having me, Matthew.
Meanwhile, the World Bank says growth in sub-Saharan Africa is holding steady, but warns that downside risks are increasing amid global uncertainties. The region is projected to grow by about 4.1% in 2026, unchanged from 2025, but revised downward from earlier estimates as rising fuel, food, fertilizer costs, that's weighing on economies. The World Bank notes that tight finances and structural challenges could slow recovery, with vulnerable households most at risk from inflation and external shocks. All right, let's look at financial services now, and from the regulator side of things. Nigeria's cash holdings outside the banking system eased in February 2026, reflecting a moderation in cash demand after year-end spending surge as currency outside banks that declined by 3.66% to 5.21 trillion naira, while the total currency in circulation remained largely unchanged at 5.73 trillion naira. According to the latest money and credit statistics from the Central Bank of Nigeria, analysis of the numbers posted on the CBN website that shows the continued dominance of physical cash in the economy, particularly within the informal sector, even as overall liquidity conditions that remains broadly stable. Let's see how your money performed yesterday. We see the equities market gained, closed at about 202,000 points yesterday, driving year-to-date returns to 30.19%. This performance was primarily driven by gains in stocks such as, Boa Cement, Zenith Bank, and GTCO. In terms of market activity, volume traded, that decreased by about 12.64% to close at 1.01 billion units, and we see deals down to about 52,723. Well, just value in the green there, 40.557 billion, bigger than what we had in the previous trading session. Most traded stocks by volume were Access Corp, Fidelity Bank, and Wema Bank. The most traded stocks in terms of value, we had the likes of Zenith Bank, about 6.47 billion, Access Corp, and GTCO. That's by value. And we see Nigeria's equity market is back in focus after regaining its frontier status, a development that could signal renewed foreign investor interest after years on the sidelines. But what really changed? Why was Nigeria removed in the first place, and what's driving its return? Joining me now for this conversation, we have Ifeanyi Mosele, investment analyst, Cardinal Stone Securities, joining me right here in the studio. It's great to have you. Good morning.
Yeah, good morning, Ladi.
Fantastic.
Great,
you can just stand over there. Fantastic. Nice. Just that spot right there. Thank you so much for joining us today. So we're back on that frontier status, at this point. Why were we taking out before now?
So yeah, we had been on the index, the status back in 2023, and then we're taking off due to a number of factors that were alluded by the FCSE Russell. And the major point there was due to the whole difficulties where the international investors were facing some difficulties in repatriating their capital and their income back to their country from Nigeria. And then when you now fast forward back to today now, where we have seen significant progress in terms of development around the currency and also the monetary policy. These guys they now have the ability to repatriate their income and also their capital after investments from Nigeria. Another point which we believe that led to the reclassification is also the new relatively new T+2 settlement cycle, which came in last year for us about November. So, and now also in May this year, we're going to see it further moving to T+1 settlement. So the FCSC also, they like that, and that was one of the reasons why they did the reclassification up to the frontier market status.
Oh, so it's foreign investors able to take out their funds after investing, and also cutting down settlement time, for stocks. We're now on T+2.
Yes, if you recall last year, we started last year at about T+3.
Right.
That was later reduced to T+2, and then now still this year coming, there was an announcement by CSCS.
Right.
May 2029 should be moving to T+1 again. So, speedy times in transactions and a shorter cycle for settlement of transactions.
I'm sure investors love that. They want to be able to take out their money fast and take it out when they want to. And we did see, positive sentiment. I'm guessing that was bullish news, for the market. And we did see positive sentiment. And when we look at, top trades by value, we're seeing financial services, topping all of that. And, Zenith Bank, that led with about 6.5 billion in trades yesterday. That's for value, Access Score, GTCO. Then if you flip over now, because, we're still in the earnings season, at this point, and I guess we're looking out for the big banks right now. And looking at the FUGAS, that's talking about First Holdco, UBA, GTCO, Access, and Zenith Bank. We have results out from, that's full year, audited results, 2025 for Zenith, GTCO, that's out. We're still bracing for First Holdco, UBA, and Access. And definitely when these results come out, they have a way of, impacting, investor sentiment. But I'm wondering, we have a lot of, should I call them newbies in the market right now. They hear it's earnings season, they don't know how to play it, at this point. If you put Zenith Bank's earnings now, looking at, the gains they made for 2025, if you flip over to Zenith, you see Zenith, okay, so they have an interest income, 3.6 trillion. An investor is seeing all this, a new investor is seeing this, and they might not understand, but they see that some things are going up, at this point. What do you look out for in this, looking at these earnings?
Okay, so first of all, looking at the earnings from Zenith Bank, one thing we like, yet again, they reported a trillion naira PAT, same as what they did in 2024. And when you look at this, their interest income, this was a major driver, about 3.6 trillion. When you compare it to their gross earnings, that's about 90%. So one thing we very much like is how their majority of their income came from their core lending, that's their interest income. And then in 2025, where you see that their interest income is growing by about 35%, you look at their interest expense growing much slower at 4%. The first thing that jumps at you is they are going to be improved margins. They are going to see, and that is, the number is also telling that story. When you look at their net interest margin, 2024 was about 10%, 2025, you are seeing it at about 12%. And one thing they were able to do very well in 2025 was basically to capitalize on the high elevated use we are seeing on NT bills. So we saw increased investments by Zenith Bank in treasury bills, and that was one of the major drivers for their increase in interest income.
Right. So, seeing 2025 earnings, recapitalization, that's started around.
That started 2024. 2024 into 2026, yes, 2-year period.
Okay. So that meant raising capital, at this point. So does that play into these results?
Yeah, of course it would. When they had completed their capital raise back in 2025, the management, when you get this money, this is, when you get the money in form of deposits, you have to pay interest expense on that. But when you get it in form of fresh equity, you can just channel it straight into your interest income, expanding, acquiring, look into the market where you see opportunities that you can capitalize on, put your money inside there, make your, nice yield and report income. And then also, after the capital raise, the management had also alluded, they were looking at plans to, expand, basically leverage that capital to expand into other markets. So that became a priority for them. And then we saw them announce things like plans to expand into West Africa, places like Senegal and then Cote d'Ivoire. So yes.
All right. So I'm still imagining I'm a novice here.
Okay.
And I'm looking at this at this point. What is bearish, about this? I've done some little research there. Profit before tax, we see that declined. There's also a huge spike in impairment. How does an investor look at that bit? Even still looking at the results generally, even though we see some bullish parts there. How do you look at that?
So you mentioned the impairment charge, which we saw. Impairment charges in 2025, if you recall in Q2, the CBN had come out with the directive on banks which have forbearance loans. So that basically drove any bank to booking impairment charges of close to 800 billion, and that led to a spike in their cost of risk. So despite this sizable impairment, they were still able to report a trillion naira PAT. And then if you look at that magnitude of impairment, we shouldn't see that in 2026. In fact, we even expect a moderation in cost of risk to the historical band of 1% to 2%. So in the absence of that, we see quite a strong headway for Zenith Bank's performance in 2026. So that impairment, 800 billion, close to 800 billion on impairment on loans, we shouldn't see that recurring at that magnitude.
Right. So as an investor, I'm looking at this and I'm saying, you know what? They also announced dividends at this point. How does that work? I'm not invest. Let's say I don't own any of these shares. At this point, they announced that kind of dividend. What am I supposed to do with that?
You see the announced dividend, 8.8 naira and 5 kobo final dividend. When you look at their total for FY 2025, because if you recall, mid-year they are declared 1 naira and 5 kobo, so the total now amounts to 10 naira. When you see a company doubling its dividend year on year from 5 naira in 2024 to 10 naira in 2025, and I also see their payout ratio going to about close to 40%, which now aligns with the historical average. So I think that is something investors always like. I mean, you are investing in a company that's still redistributing income to you, about 40% of their EPS as dividend to shareholders. So that is always very attractive for investors.
All right. So definitely as an investor, when you see these results, you don't just look at the surface. You try to look in between, but you take the profit after tax, before tax, and all of that, and that gives you kind of like direction into how this business is actually going, and that should also inform your investment decision. But aside from the results, do you see any other bullish news that could actually make investors happier?
Yeah, I mean, now that I even mentioned it, yesterday we saw a disclosure from Zenith Bank. They had disclosed to the market that they had completed a 100% acquisition of share capital in Paramount Bank Kenya. So now they are looking to expand into Kenya. They've even completed the acquisition. That is in East Africa, which is in line with their expansion plans. And then that also ties finally with the numbers we are seeing. If you look at their 2025 results, outside Nigeria, total revenue that gets outside Nigeria is now about 20% of the group's total revenue when you compare it to, let's say, much higher than what it was doing in 2025. So we're seeing plans to expand, but also seeing the numbers supporting that story and increased income from outside Nigeria, both from the UK and other African branches. Yeah. Okay,
so we have two tier 1 banks with their results out full year 2025. Then we have GTCO. That's another story, an orange story at this point, with gross earnings 2.15 trillion, up about 9 basis points year on year from 2.15 trillion. I guess other points there. Pre-tax profits, that was down about 2.78%. What are we looking at here when it comes to GTCO?
Okay, so GTCO kind of similar with Zenith Bank. Solid core performance. That's why you're seeing them still reporting a growth in gross earnings to about 2.2 trillion. Majority of that is also still from their core interest income. One thing we saw in 2025, we saw the naira appreciate in 2025, and that led to some of these banks reporting lower non-interest revenue year over year, because we saw some of those sizable gains in 2023, 2024, where they booked revaluation gains. So now in the absence, when we now see the naira being stable and also appreciating, the reverse becomes the case. So now, despite that, you can still see them reporting a growth in their gross earnings. And then the PAT, sorry, the pre-tax income, that's the PBT, is just due to the now that the noise of the FX revaluation is outside the way, you can now see the banks for their core performance, looking at their core interest income, looking at their fees and commission income.
Okay. All right. So at this point, 2 down, about 3 to go. Take me back to the Fugas. At this point, we see that's First Holdco, UBA, GTCO, Access, Zenith. So 2 down, 3 to go at this point. I'm sure we're expecting maybe stellar earnings, from these 3, at this point.
Yeah, I think for majority of the tier ones, if not, we're even still expecting at least for majority of them double-digit growth in their net interest income, just to show how robust and how well these banks are doing. Given the last performance in 2023, 2025, you saw them grow their balance sheets quite sizably. Part of it due to revaluation gains, but still they're still able to leverage that bigger base to generate income. So look at the likes of all the Fugas, First Bank, UBA, GTCO, Asset Zenith, now have much larger interest earning asset base. And then when you now look into the market and what yields are saying right now, some of these guys are increasing their investments in treasury bills. So that's just strong earnings for them in terms of their core performance. And then for the non-interest revenue, if you look at the fee front, we're still expecting growth there.
Okay. All right. I guess, as an investor, out there, you see some of these earnings, you're trying to understand it. This one is up, this one is down. I guess we'll be breaking it down for you here. So keep it, tuned on Business Morning, and you'll make sense of most of these results. We have 2 out now, GTCO, Zenith. We're expecting these 3. And when they come out, we'll also break it down for you. Thank you so much. Ifeanyi Osele, investment analyst, Cardinal Stone Securities. Thank you for coming on today.
Yeah, thank you for having me today. It was nice being here.
All right, we'll take a break now. When we come back, more conversations now, especially what the Central Bank of Nigeria is planning next. Just stay with us.
The state of Nigeria's pipeline security and a battle against crude oil theft is the reason for this roundtable by the Petroleum Committees of the Senate and House of Representatives.
The previous OPEC...
The event is kick-started by the chairman of the Senate Committee on Gas Resources.
Illegal connections discovered and dismantled have increased by over 300%. Volumes lost to theft have dropped from a peak of over 400,000 barrels per day to under 100,000 barrels per day.
Remarks are received from the Senate President and Speaker of the House of Representatives, who were both represented.
The Senate President insists that every stakeholder must collaborate with the brief of the security agency in securing security or the peace of the pipeline.
Distinguished colleagues, I urge you to use this roundtable as a forum to assess the current pipeline surveillance architecture, strengthen transparency and accountability mechanisms, deepen community engagement as critical stakeholders in protecting national assets, and align legislative frameworks with emerging realities in the oil and gas sector.
Security agencies also reel out their successes and challenges in the fight against crude oil theft.
The Joint Intelligence Monitoring Center operates directly under the Office of the Chief of Defense Staff and tasked to monitor, analyze, and produce actionable intelligence towards achieving the mandate of Operation Delta Safe, which is to curb oil theft and illegal bunkering in the Niger Delta.
Limited deployment of advanced technology, weak interagency coordination framework, absence of specialized courts for energy crimes, because most of the offenders of these criminal acts, most of the time they spend a lot of time in the court.
For the NNPCL, the development in the oil and gas sector have led to a restoration of investor confidence.
One of the most profound outcomes of this improved security environment has been the restoration of investor confidence in the Nigerian upstream sector. Projects that have stalled for years due to security and host community risk are now reaching final investment decisions.
The technical session features an update from the private security firm responsible for securing the nation's pipelines in the Niger Delta region.
Look at the oil wells, illegal, thousands of them, all loaded with crude oil.
It is clear, it is evident that there is an increase in our production, and that there is a reduction in oil theft, and that our pipelines are becoming safer, which by the grace of God also means that the level of degradation in the host communities have reduced.
Subsequently, petitions against Tantita Security Services are dismissed by the joint committees on the grounds that the petitioners failed to honor invitations to further substantiate their allegations. Terry Ikumi, Channels Television News.
All right, now to our next conversation. Nigeria is once again turning to development institutions to help close its massive MSME funding gap. The big question is the problem, is it really, about capital at this point, or how credit risk is priced in the economy? With a 130 trillion naira financing gap on the table, is this about funding or a deeper structural issue with Nigeria's credit market? We see for MSME, the MSME financing gap there, 130 trillion. That's what MSMEs need when you talk about funding. Right now, the DFIs, their total assets stand at about 8 trillion naira. And now we hear the Central Bank of Nigeria is mulling recapitalizing the DFIs at this point. To help us make sense of this, we have Professor Biodun Adedikwe, the founder, chief consultant, BAA Consult, joining me right here in the studio. It's great to have you, sir. Good morning.
Happy to meet you, laddie.
Yes, sir. So much talk about recapitalization. The banks are done. Insurance companies are still doing theirs at this point. CMOs are also being recapitalized. At this point, I feel left out. I feel I should personally recapitalize myself and my assets at this point, maybe take it higher, since we're all going higher.
That's right.
At this point. So 130 trillion, that's the gap. First of all, tell us, what do the DFIs, what are they supposed to do? Are they supposed to standing for the banks when they're not lending? What are they really?
Okay, a fantastic place to start from. Now, DFIs, by their nature, do two things primarily. They provide funding of two types, equity and also loans. We call it loan capital, okay? And then secondly, they provide technical support, which means their focus primarily is about economic development. But they do all of that at a non-commercial rate. That's the pattern globally. And they are also in 4 different categories. There are national development banks, there are multilateral, then there are those that are bilateral, and of course those that focus on microfinance. So if you look at all of those, they have the same major objectives, which are described: funding and technical support to either particular sectors of the economy or looking at the economy broadly. But by the time you begin to go through geographies, the focus changes. You take, for example, Belgium and Turkey. Their focus is on the bottom of the pyramid. That's the poor. But when you come to Africa, they mostly focus on energy, they focus on infrastructure, they look at climate resilience, and of course, a couple of other areas, which means, depending on where you look at, it is the need of that environment that determines what they do, essentially.
So technically, they're also supposed to step in.
That's right.
When the banks can't lend. All right, let's look at the key development finance institutions in Nigeria. We have a couple of them. We have the Bank of Industry.
That's right.
We have the Development Bank of Nigeria.
Yes, DBN.
We have the Bank of Agriculture.
That's right.
That's the primary DFIs. Then, specialized sector focus, Nigeria Export-Import Bank, Federal Mortgage Bank of Nigeria, and Infrastructure Bank PLC. I guess the Bank of Agriculture also falls into
that as well,
status too. But we have quite a number of them.
That's right.
At this point, and it's just 8 trillion.
Balance sheet footing.
Right. So how much should they really be holding at this point?
Well, if you play that against the gap, that's the financing gap for MSMEs only.
Only.
We are not talking about infrastructure. We're not talking about energy. We're not talking about other areas of need, okay? Manufacturing, even agriculture itself, okay? So if we look at that gap alone, that's a ratio of 16.25% differential. And if we bridge that gap, it means their balance sheet ideally should be nothing less than 80–90% of that. And don't forget, as you mentioned at the opening, we also have other financial institutions that are playing within that same space. So, but they, because of their specialized nature, speak more to the particular needs of MSMEs. And that's the way they are all over the world, that DFIs. So in which case, they need to scale up, and that speaks to two things. The first is productivity enhancement, and the second is competitiveness, which in fact will play a big role in what the central bank is envisioning for them now under recapitalization.
Right. So at this point, we have the banks recapitalized.
Yeah.
Then the DFIs, we imagine they get recapitalized because it's not yet. The CBN is still mulling this.
That's right.
Right. But you know, what do you think the CBN should really do?
Well, a very good question there. Now, what CBN should do, and don't forget that these banks were all promoted and largely owned by the government, whether directly or indirectly through MOFI and the rest of them. Okay? So it means essentially then that number one is to inject fresh capital into them. Then secondly is to look at the quality of their balance sheet. And that will speak to their ability to attract funding outside of equity injection by the regulatory authorities of the government of the nation. So and that is where we now come to the quality of the balance sheet and then the rating they also obtain. That is rating of not only the entity itself, but the instruments that it issues in order to raise funds, you know, in the global capital markets. So which means then that we look at them one by one and then ask those questions. And then, of course, also look backwards to history. How about the impact since they were established? Perhaps the youngest of them is the Development Bank of Nigeria, okay? But if you take BOI, for example, it's been in existence for long, all right? So it also has gone through the process of transformation that deepened its ability to intervene in the markets. So if you look at the central bank today that says we have gone orthodox, which means we are returning to the, you know, primary function of central or reserve banks, and that is monetary policy, which focuses on stability, financial system stability, and then, of course, you know, price stability, primarily inflation targeting, as we call it in central banking. So if our central bank has returned to that, and it has demonstrated that in the last 3 years thereabout, it means that their focus on the DFIs will be what we would have done by way of intervention in the sectors, like the previous management of central bank did. We now do that through the DFIs. So in which case, there has to be a three-pronged approach to this. Number one is to recapitalize, that is to inject fresh capital in them. The second one is to now make those funds that CBN on its own would have put out to intervene in those critical sectors through now those DFIs. All right? And then the third one is now working with them to strengthen their balance sheets so that on their own they can attract additional funding.
That makes sense.
Yeah. I mean, that's the way I look at this.
Okay, so I've been thinking about something, you know, since I started hearing a lot about recapitalization. Is there a relationship between currency devaluation and recapitalization? Because I try to imagine if the Naira was still trading around 300 to the dollar, would we really be keen on recapitalizing? Or is it majorly because of devaluation? We're all trying to recapitalize at this point.
Devaluation plays a big role there. And why is that so? Because internationally, let me bring in some fact here. In 2025, DFIs globally now, not just in Nigeria or Africa, globally had a total intervention of $2.15 trillion. All right? And that's quite significant. In fact, when I saw that figure, I asked myself, what volume are we talking about in Nigeria? And we talk about the volume in Nigeria, it means you have to take their Naira balance sheets and convert to USD. Once you convert to USD, it becomes a tiny proportion of that. And when you look also globally, perhaps the only DFI in Africa you can make reference to is the African Development Bank, which has done significantly well, okay, in that regard. So which means anytime the currency loses value, then what will hold as either your assets or your equity, which is what we call the trigger of growth of the DFI, and then the intervention it can also do. It means you have to look back at that balance sheet, look at your capital, and consider how to upscale that. You know, like I said earlier, in fact, the comment I made on productivity and competitiveness came from a discussion about a similar thing happening in Europe. So when you invited me for this, I was like, okay, it seems you are aware that this is a major issue for them in Europe as you speak. There's a convention yesterday that said Europe is losing against Asia and also America. And why is that so? Because the DFIs have not been able to intervene the way they're supposed to do. Therefore, innovations, which is in fact a critical thing that DFIs also promote, okay? Research and development is also a major area they promote. So that Europe has been weak in those areas, and therefore they are not as productive and competitive as they're supposed to be. So coming now to this, it means we look also at our DFIs as providing support for research and development, and especially innovations. So, and of course, I've seen a bit of that when I researched this recently, especially with BUI. Okay? So how do we deepen that so that we can boost productivity and also now make the Nigerian economy and also the various sectors of it competitive? The competitiveness this time around is to be able to attract resources, because that's the focus eventually. So DFIs also, if we look at how we transform them to also strengthen their intervention in the area of R&D and of course innovations, most likely we get them become more relevant to transforming this economy and growing it inclusively, and also to the goal Mr. President said, $1 trillion. $1
trillion.
By 2030.
Keyword, inclusive.
Very
inclusive
key.
growth.
Very key.
Thank you so much, and we definitely need a lot of patient capital.
That's right.
At this point. Thank you so much for helping us unpack this. Professor Biodun Adedipe, the founder, chief consultant, BAA Consult. Thank you so much, sir, for coming.
Happy to
and
greet
I hope
you.
I see you again very soon.
Thank you.
Thank you, sir. Now it's time for Global News for Thursday. Global News, what we're starting first, or we make our start always from the market's point of view, and this time we're looking at the global markets, major markets across Europe and Asia. Asia is already closed, but opening, European markets, they opened on the downside, and that's because of what you might call a fragile ceasefire agreement between Iran and the United States, which was signed yesterday, where they agreed to about a 2 weeks ceasefire from what's about almost 40 days of intense conflict in between the two countries there. So earlier, the UK's FTSE 100 opened down by 1%, while France's CAC began the day down by 0.5%. Germany's DAX also opened down 0.5%. So all the markets, even the Asian markets, traded lower. South Korea's Kospi was down 1.53%. Japan's Nikkei fell by 0.77%. All those markets, all tracking that's what the Iranians were saying, that the U.S. had backed down or kind of like breached that agreement. But only time will tell how far that ceasefire agreement will hold. It's just 2 weeks, so we're just counting down to how that will hold and how the markets will continue to react to the ceasefire agreement. So from global stocks, we head to Goldman Sachs. The investment bank has cut lower its second quarter outlook for benchmark crude oil prices. First, it's reviewing the price of Brent crude by $9, down from $99 to about $90 within the second quarter. And for the Brent, it's cutting it down by $4, down from $91 to $87 within the second quarter, and is citing a reduction in the geopolitical risk premium, as well as the expected gradual reopening of the Strait of Hormuz as a primary drivers for the adjustment. But so far, despite the cut, Goldman Sachs has warned that the risk will remain on the upside. That's if the ceasefire fails, and the Middle East production losses is estimated at about $2 million per barrel.
if it persists. And that means that the Brent could surge forward to about $115 per barrel by the fourth quarter of 2026. And so far, the bank has kept its second half of 2026 forecast unchanged, expecting Brent to average at about $82 in the third quarter and $80 in the fourth quarter. So that's it for Goldman Sachs. And from Goldman Sachs, let's head over to Britain, where UK Foreign Minister Yvette Cooper is expected to call for unhindered access through the Strait of Hormuz on Thursday, countering a push by Iran to control one of the world's most important oil checkpoints. In an annual foreign policy speech, which is expected to be announced today, Cooper is expected to say that shipping must be toll-free through the Strait of Hormuz, which has effectively been blocked by Iran since the start of the war. She's also expected to push for Lebanon to be included in the 2-week ceasefire agreed between the U.S. and Iran. That announcement, which was announced on Tuesday. So the Strait of Hormuz is a narrow, well, we all know what the Strait of Hormuz is, but for those of us who do not know, the Strait of Hormuz is a narrow maritime corridor that connects the Persian Gulf and the Gulf of Oman. Roughly about 20% of global oil and gas typically pass through the Strait of Hormuz. And now, back home, let's go to Dangote. The Dangote Group is targeting, will be needing about $40 billion investment in its Africa expansion drive, and this is according to the Africa Export-Import Bank, Afrexim. And the expansion plan comes as supply disruptions spawn across conflict in the Persian Gulf and the global fuel and fertilizer supply chains. So, just on Wednesday, the company signed an agreement for a $2.5 billion facility underwritten by Afrexim Bank as part of a $4 billion syndicated term loan, and that's for the Dangote Petroleum Refinery and Petrochemicals free zone. So now we're expecting that that expansion, which includes a boosting of urea outputs to about 12 million tons by 2030, up from 3 million tons, will make the company the world's biggest supplier of crop nutrients, and that's according to the billionaire owner of the company, Aliko Dangote. And then from Dangote, we move over to the United Arab Emirates and Bahrain, which have signed a $5.4 billion currency swap deal. This follows a financial resilience package launched by both countries' central banks back in sometime last month, and it's aimed at buffering the banking sectors against the economic shocks of the recent conflict in the Gulf region. So by using the currencies, both businesses between the countries can avoid the double conversion costs associated with using the dollar or euro as an intermediary. That's just like an alternative against the dollar. And the deal is a strategic move to insulate regional trade from global currency volatility and reduce the reliance on the United States dollars. And finally, let's move over, take on the size of technology, where we see the global technology conglomerate Meta Platforms, that's the parent company of WhatsApp, Instagram, as well as some other social media, major social media platforms, is making its debut of the first major artificial intelligence model since the costly hiring of Scale that's one of the AI models. So it's trying to counter or to match with Google as well as Anthropic and OpenAI. So that move, which was announced yesterday, marks up a massive pivot for the company following an internal restructuring that saw the creation of Super Intelligence Lab and the departure of long-term research lead Jan LeCun. So dubbed as, so that is expected to have a large impact and also drive Meta's, the share price of Meta, particularly the share price of Facebook and other social media platforms owned by the global tech giant. So that's global news for Thursday.
All right, thank you so much, Anita. Very quickly now, the NGX in the green right now. Stocks getting attention. Guarantee Holding, Zenith Bank, Veritas Capital, Access Holdings. Yeah, it's majorly financial services stocks getting attention right there on the NGX. Bitcoin down, Asia down, oil up. We'll bring you more updates at 1:30. I'm Ladi Williams. Bye for now. Have a profitable day.